Welcome to the Plan Solutions Incorporated podcast, where we give facts and insight on the latest happenings in the world of economics, financial markets, and personal finance. Plan Solutions provides advice on a variety of financial topics, including investment management, tax preparation and planning, and retirement planning. Chase has 25 years of experience in the financial industry, holds a certified financial planner and chartered financial analyst designations, and has earned a master's degree in taxation and a doctorate in business administration. Chase has a passion for helping clients down the path toward their financial goals. And I'm Jason LaChance, and on this episode, we're going to discuss Los Angeles wildfire tax relief, AI market panic, qualified charitable distribution limits increase, and a look at the Plan Solutions Incorporated office bulletin board. Mr. Armour, how are we, good sir?
Just, staying inside here in rainy Northern California. But looks like we got a few more days and then it may pass and we'll get some a little better weather. So we'll see.
It seems to be from us all the way up to you. So yeah, but it's good. We need some of these rains for sure.
That's right.
All right. Well, let's dig into our first topic here. Los Angeles wildfire tax relief. I mean, I'm glad to see this happening. The IRS has announced several provisions to provide tax relief to those who've been impacted by the wildfire disasters, which started on the 7th of January. What are some of those areas that they're offering?
Yeah, so typically when there's a disaster, especially, presidentially declared disaster area, then the IRS steps in and provides a lot of guidance on different provisions that people may benefit from. So the first thing is determine if you qualify, right? So the federally declared disaster area is basically Los Angeles County. So if you reside within there, then you'd automatically qualify. And the way they track that is if the address that you're using to file is within that county, then it's automatic. But there's also, it could be extended, if you had a business within that area, right? Or, if you stored business records, which could be a huge problem of having to try and recreate those business records. You may still qualify for some of these benefits, but you'd need to contact the IRS directly to, make sure that you're getting that proper relief. So then once you determine if you qualify, then, these different provisions would kick in. So one is the deadlines to file tax returns is automatically extended to October 15th. That's not a huge relief because obviously any of us could file for that extension, but this way you just don't even need to file, it's automatic. But then a number of other items are also extended to that October 15th deadline. So, normally IRA contributions or health savings account contributions, you'd have until April 15th, but now you have until October 15th to make those contributions. In addition, the estimated tax payments, right? So the last payment for 2024 would normally be due on January 15th. That was extended to October 15th for those working on their 2024 returns. And then also for 2025, the first, second, and third quarter payments, which would be due April 15th, June 16th, and September 15th. All of those have been extended to October 15th. So basically what that means is you don't have to make those payments as you go. You can make them all before October 15th, and you won't be subject to an underpayment penalty for paying, later than what would normally be required.
And what are they offering as far as relief? I know you state here concerning retirement plans and IRA participants. I mean, people are going to be needing to tap into some of their saved wealth.
Yeah. And so let's say, they need to get into those retirement plans to, just pick up the pieces. If it's an IRA, then they can make an early distribution. So if they're, younger than age 59 and a half, they would normally be subject to a 10% early withdrawal penalty. In this case, that early withdrawal penalty would be waived. Now the distributions would still be taxable, but they would have the option of either, reporting all of the tax in this year, 2025, or, dividing it into thirds and reporting it over the next 3 years. So 2025, 26, 27. which potentially spreading out that income over multiple tax years could reduce the overall income tax impact, right? If it keeps them from going into the next bracket or maybe a credit that they would have qualified for, not qualified because their income was too high. So there could be a benefit to doing that as well.
Yeah, well, and one of the other hot button areas, of course, that we saw discussed in the news around insurance and some of these folks. What are we seeing as far as that goes?
Yeah, if someone has a loss and it's covered by insurance, that insurance proceeds won't be taxable, but they can't claim a deduction for that because obviously they've at least financially been made whole. But if they have an uninsured or unreimbursed disaster-related loss, typically under the new tax rules, those are not deductible. But if you are in a federally declared disaster area, that's the one exception where you may be able to take a tax deduction on your 2025 return for those uninsured losses. So, maybe an opportunity for people to recover some tax at least
Mhm.
in terms of those losses.
Yeah, and what do they need to do when it comes to filing concerning that?
Well, they'd want to cite the declaration number on the form, right? So
Okay.
that's one of the so it's you put in the FEMA declaration number. In this case, it's 4856-DR on the return to make sure that it's clear. And speaking of FEMA, also there's been some question on the $750 payments that FEMA
Mhm.
will come in and make as just kind of very short-term relief. Those payments are not taxable. Keep records. They don't have to worry about reporting them. But that exclusion is contingent on payments from a government agency, which is what it says in the tax law. So payments from other public charities, things like that, may be treated differently depending on the situation. Also, that is also true of things like GoFundMe. A lot of people don't realize if you're drawing on GoFundMe payments, then that could reduce or eliminate your eligibility for disaster payments from FEMA.
Mm.
And those GoFundMe, because these are just private contributions, may be taxable. Whereas the FEMA payments, if their connection with personal, family, living, funeral expenses, home repair, rehabilitation, those kind of things, typically are not taxable.
Yeah, thank you for pointing that out because I do know a few individuals who lost homes and one gentleman who lost not only three business locations but personal home, and there was a GoFundMe. So that has been a thing that I have seen prevalent in a good way. Obviously, people wanting to help, so that's a great thing. What about eligible individuals or families seeking a tax return preparation assistance? I mean, it can get quite costly.
Yeah, well, and in this case, obviously, you could have someone who maybe had a very simple return, right, and was just, doing it themselves or doing it online. And now, if these provisions, applied to them, it could make their return a bit more complicated in dealing with these things. So, obviously, we, in this case, would recommend somebody work with a professional. But let's say, that added cost would be a burden or something that they don't want to pay. Then they may want to look at the IRS VITA program. That's the Volunteer Income Tax Assistance Program, or the Tax Counseling for the Elderly program, which typically will help people over age 65 or with individual with adjusted gross income under 84,000. You could qualify for one of these free programs where, in essence, trained volunteers. There are certain limits in terms of the complexity of the return that they could do, but they are trained in certain areas of tax law. Prepare those returns free of charge, and they should be able to handle these different disaster relief issues.
Okay. Thank you for that clarification. And we do have in the podcast description a link to IRS, the California wildfire victims qualify, who qualifies for tax relief, deadlines, etc. So you can also read that additional information as well. Let's jump over to the AI market panic. I saw, I literally, Chase, I got in a car with a buddy and he goes, "Have you seen this DeepSeek thing?" And I go, No, but I know someone I'm going to be able to converse with about this. So it was quite ironic when I opened up the personal financial review to see this. I was like, perfect. I knew you folks would be all over this. What are we seeing as far as DeepSeek, the Chinese-based artificial intelligence, and what it's done to the AI market? Because there's a ton of stuff that's in the news. And I always like to talk with you because we can calm the sensationalism.
Yeah, yeah. I mean, yeah, it definitely got people's attention, and it's been towards the top of the App Store for download, so a lot of people are checking it out and kind of seeing what it can do. And that did have some real market implications, right? We saw a sharp sell-off, especially in companies that are the most dependent on AI investment. So it did kind of upend the competitive landscape for artificial intelligence, which was pretty interesting. I think there's two parts to this that both have different implications. So, the first is a lot of experts in this area are saying that DeepSeek was able to replicate 90% of the results of the best US based AI models, but was claiming to be able to do it at a much lower cost through using more efficient algorithms and things. And so just the cost of compute that they were accessing compared to what a lot of the U.S. companies were paying was a huge difference. And the idea was, if you can get 90% of the accuracy at a fraction of the cost, is that just as good or better? Now, I think there is a lot of uncertainty as to how accurate those real cost numbers are. And in terms of the research paper that DeepSeek released, and their access to certain hardware that were they or were they not able to access it because of sanctions and different things. So it's a little bit of an unknown, but still, it's pretty well agreed that maybe the cost was not as low as they were claiming, but still likely much lower than what U.S. based companies are paying. So obviously that, to an extent upends the market because, if these models are able to become more and more efficient using similar criteria, maybe there won't be as much need for the compute infrastructure, the hardware, everything that goes into it. And then the other part that I think is the bigger story here is that DeepSeek is open source, which means basically they're just giving away the code.
Right.
And anyone can go and download it and make adjustments. And so, you have to think about it from an investment standpoint. If you're a US company or investor and you've been spending, billions and billions of dollars on developing these AI models, obviously you're doing that with the idea that at some point you'll be able to monetize that investment and turn a profit. And if suddenly someone's releases a model that's reasonably similar but basically giving it away, what does that do to that end market? What does that do to those financial projections? Which I think may have been part of the goal here, at least coming from China, that if they're not able to quite keep up with the progress that's being made in AI research in the US, then it might be to their benefit to really disrupt the market, right?
Yeah.
And slow the progress that US actors are able to make because the investment either slows or is reduced that's going into the research. So, that does create kind of this this big shakeup in terms of what's the real end value and of these investments, and will they continue at the same level? And obviously that's going to have an impact on a number of companies.
Yeah, absolutely. And one of the other areas that I was reading on, of course, speculation as well. What does open sourcing for the AI then mean? And if people are jumping to integrate, could it have some backdoor coding? And so there's a lot of speculation, and that's what I always appreciate about being able to talk about these hot button topics on the podcast here to share with people that. Sometimes, the sensationalized headlines to get us a little panicked or paranoid or whatever, it helps kind of give a greater perspective to it. Anything else that you want to add concerning this topic?
Well, I think you bring up a great point in terms of, things that people are concerned about. That information sharing with China and privacy and all of those types of things. And, maybe in the US that will be something that people will be concerned about, just like the whole TikTok issue that's still ongoing. But really, I think where this comes down to is the competition for users on the rest of the world.
Mm,
Right. So even if China just uses their model and the US just uses US based models, a lot of economic and political history has been determined by who's able to then go out to the rest of the world and get them to adopt their standards. Because obviously there's a lot of both economic power and soft political power that goes along with that.
right.
I think the other thing that's really interesting is right now a lot of these large language models, these AI models that people are using, I mean, in essence, they're just arguably a better search engine, right? In terms of how quickly and the way that they're able to process information, because we're still very early days into this artificial intelligence movement. But arguably the big test will be when these models have already basically scraped the internet and pulled in all of this information, then their ability to go in and create synthetic trading data and then learn from that data and then reinforce. As a model, you can kind of think about it the way that humans learn, right? That we take in all of this information from the outside world, then we ponder it. We make connections. Some of them are right, some of them are wrong. We go out into the world, we test those connections. The ones that are good are reinforced. The ones that aren't, drop by the wayside. And that's how we learn and progress. And arguably, that will be the big leap forward for these artificial intelligence models. Their ability to take this data, create synthetic data, learn from that data, and not just be, in essence, regurgitating, human knowledge that's already in existence, but potentially creating new knowledge. Naturally, that is going to take significant investment, significant amount of compute power, and will, the DeepSeek market disruption that we're seeing cause that investment to slow and slow that process, so that maybe a lot of these US companies that have really been charging forward don't make that big leap forward as soon as they potentially could, which also potentially would give other models, other countries time to catch up, which
Yeah.
may be the end goal of releasing this DeepSeek open source model to really disrupt the market. So it's really interesting. I think it does represent a significantly increased risk within that market that needs to be priced in, and probably will be priced in to a degree over time, as opposed to just kind of the one-day market move that we saw when that model was released.
Yeah, yeah. All right. Well, let's jump to qualified charitable distributions limits increase. So the IRS allowed qualified owners to make qualified charitable distributions in which an individual transfers funds from an IRA directly to a qualified charity. We've talked about this benefit. What are we seeing as far as the shift and change and increase of limits?
Yeah, we've talked about this a number of times. It's really become more and more popular because it does make more tax sense for really the majority of clients we work with, at least. So we're doing more and more charitable giving directly from IRAs. A person has to be over 70 and a half. So in some cases, we're making reminders as soon as that happens to switch over the method by which they're doing their charitable contributions. And originally, when the law was passed to allow qualified charitable distributions, the maximum amount was 100,000, but it was indexed for inflation. So it had increased to 105,000 in 2024, and now it's up to 108,000, and that's per taxpayer. So a married couple can actually exclude up to 216,000 in taxable income if they are inclined to give that much to charity. They can do it directly from a pre-tax IRA, money that has never been taxed, and send it directly to the charity. So, they don't have that tax liability. And then in other cases, qualified charitable distribution might not be the best, but maybe you use a donor advised fund or something like we've talked about in the past. So this is it's a more complicated area of tax and financial planning than it was in the past, when you just, wrote a check to a charity and reported it on your Schedule A is an itemized deduction, and you got a little bit of a tax benefit, depending on the amount. Now you really need to pre-plan and think about what's the best way strategically to make these charitable contributions.
Absolutely. And as always, contact your tax professional and look at that when it comes to your planning. Anything else you want to add before we jump to the bulletin board, Chase?
No, I think that covers that topic. Although, if history serves as a indicator, we'll be circling back again. All of these changes, and again, they are so complex. We want to make sure people are aware of the options that are available to them. So, yeah, I'm sure it will continue to evolve.
Yeah, absolutely. All right, let's jump on over to the Plan Solutions Incorporated office bulletin board. Got one item pinned up there this week. What do we got?
Yeah, so we have a new member of the Plan Solutions team, Carter Osborne. Some people may have met him when he was interning for us over the summer. Then he spent a semester abroad in Thailand. Great opportunity. And then when he returned, he's enrolled in his final college semester at Sacramento State University, and really started as a Plan Solutions employee. Full employee, not intern anymore. But we'll be working 60 to 70% time around his class schedule as he finishes up his academics, with the plan that, in the summer after graduation, he'll be a full 100% time employee.
Yeah, that's awesome. I look forward to meeting him. And it's always great. One of the things I've always appreciated is that because, as I've said here on the podcast, you and I interned at positions and eventually got hired and worked our way up. So it's really great to give that opportunity to others who are really motivated. And just an amazing staff there.
Yeah. I mean, we're really excited about the opportunity. I think he's going to be a really good fit. Obviously it'll take quite a bit, just like it did for you and I, to learn what we needed to and work up within our professions. But he's really hitting the ground running, has a, real thirst for knowledge. So we're just trying to keep up with that and include him in, client meetings, phone calls, where there's an opportunity to really develop that knowledge and keep him moving forward.
Absolutely. Well, Chase, I got to ask you before we close this up, as of the release of this episode, the Super Bowl has already passed, but who are you taking?
I'm taking the Eagles just because after the Chiefs beat my Niners last year, I just can't cheer for them. So I'm hoping the Eagles can pull it out, but I don't have a whole lot of confidence in that prediction. So, don't anybody take my words and run to Vegas, because that'd be the blind leading the blind in that situation.
Hey, I am with you on that. My youngest has already got her Eagles shirt and is excited and hopeful, but she's also a Niners fan. So I hope it's not a couple of years in a row of letdown. So we'll see. Hopefully it's at least a good close game. That's all I ask for. Everybody, what do you want out of the Super Bowl? I just want a good game.
And good commercials. Yeah, that's what we really need here.
Yes, sir. Well, we thank you all for listening to the Plan Solutions Incorporated podcast. Of course, available on Apple Podcast and Spotify, where please give us a follow there, give us a rating, and you can give a review on Apple Podcast. And please share with others, as we don't do any advertising of the podcast, only word of mouth, and we continue to see growth. So we know that comes from you, and we want to thank you. As well, if you'd prefer a visual form of the podcast where you can follow along to the Personal Financial Review, we do have a YouTube channel. It's youtube.com/@PlanSolutions, and you can follow along right there. And if you have yet to subscribe to the Personal Financial Review, simply send Katie an email and get subscribed today. It's KATIE@plansolutions.com.
The views and opinions expressed in this podcast should not be construed as an offer to buy or sell any securities. The information may not be current, and Plan Solutions has no obligation to provide an updates or changes. Plan Solutions does not make any representation or warranty as to the accuracy or completeness of the statements or any information contained in this podcast or any liability therefore, including in respect of direct, indirect, or consequential loss or damage, is expressly disclaimed. Plan Solutions is not providing any financial, economic, legal, accounting, or tax advice in this podcast. In addition, the receipt of this podcast by any listener is not to be taken as constituting the giving of investment advice by any Plan Solutions associate or individual to that listener, nor to constitute such person a client of Plan Solutions. Any reference to a specific company or security does not constitute a recommendation to buy, sell, hold, or directly invest in the company or its securities. Market indexes are unmanaged and cannot be invested in directly. All price references and market forecasts correspond to the date of this podcast.
Plan Solutions is a registered investment advisory firm.